Good day, Market Chameleons, and everyone joining for the first time. Thanks for coming by and checking out the live webinar series. Before we get started, let's take a look at the shared disclaimer. Please be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes only concerning Market Chameleon tools and products. One last look at the disclaimer, and let's welcome Dimitri Pargamonic to the stage. We'll be talking about how to analyze spread trades using open interest and multi-leg activity. How are you doing this morning, D?
Hello, Will. How are you doing?
Good. Let me share your screen.
Let's come over here. Good morning, everyone. And what we'll do today is we're going to look at some spreads that traded yesterday. And we're going to compare yesterday's trading activity, some of the big trades, to the new open interest, and see if we could get insights of what we think may have happened. And first, let me navigate to the spread screeners. We're going to go up here, screeners, and let's hit on multi-leg trade screener. This will take us to the multi-legs, and this is yesterday we capture and interpret what the most likely spread is. So here it's sorted by the highest volume. So we see up top HYG traded over 100,000 contracts in a put spread that involved the February 20th 76.79 puts. And you could see then we go down the line. You could tab through to go to the other pages, but let's stay on the first page. These are the top 5. And the idea here is when we look at this trade, we want to see, we might want to have more questions regarding, well, what do we think may have happened? It could have been a trade that is brand new in its opening. So somebody opened a new position. Could be somebody just closed an existing position. Or there's even a possibility that a spread involves a roll. So a roll would be, moving. You entered as a spread, but you may be closing out of one option going into a different option. So that would be a roll, and we don't really know that for sure. But when we compare it to open interest, we could make inferences if the data, based on what the data is telling us. And I'm showing you this because we're currently working on a tool that's going to help us do this and kind of make this interpretation much easier and show historical. But prior to this tool, I'm just going to show you kind of what you can do now and what the idea behind it is. So let's say we take this first put spread, and I'm going to open up the details, and here, and then over here we have more details. So we're going to click on these legs to see the legs of each put. Okay, so you can see here the Feb 76 put, and then the Feb 79 put. And here we see that in each leg, this spread traded 50,000 contracts. That's how it added up to 120,000, 50,100 in the Feb 76 put, 50,100 in the Feb 79 put. And what we could do is compare this to the open interest, because these are big trades. So, when we get these big volume trades, did they move the open interest? And here we see that in each leg, the open interest increased 56,000, 56,000, 59,000. So there could have been other trades there, single leg trades involved as well. But we see that this is a big increase in open interest in both those legs, which we could infer that, we could go look if there's any other big trades going on that would justify this. But based on that, we can infer that these two legs were opening because the open interest increased by over 50,000 contracts on each one. Okay, or close to that 50. That's what we're looking at. Was it close to that 50,000 given this high volume? So that would be, one of the inferences. Let's look at another one. Let's say we go and see, well, what happened in this one? So we see the Jan 12-14 call spread. This was tied to stock, but let's see what happened in these two legs. So I'm going to click on this open. We'll do the same thing, and I'm going to click it. So here are the two legs: Jan 16-12 call, Jan 14 call, and we see 48,000 traded on each one. And here we see a big drop in open interest. 49,000 close to here. This is 90,000. So this is already, almost twice that amount, but they dropped. We could go, look more into what traded in those, but the inference is here that these were closing out because of that big drop in the open interest that would coincide with these big volumes. And that's quickly getting the insights, without going into the other trades, but just looking at the big trades, we could kind of get that inference or surmise from how that open interest moved. Let's take a look at one more, but I think you guys will get the idea here. And hopefully once we move those tools out, that this will help with the indicators. So you're going to see more indicators on here that will help us, do that exercise, open and close and roll. Let's look at this calendar spread. So we're going to open this up, and then we're going to click on this legs. And here we see there are two legs. One, January 16th, 15 call, traded 40,000 contracts, 40,368 on this contract. And then Feb 2015 call traded 40,368. But here we see something different. They didn't both decrease. They didn't both increase. They kind of went the opposite. One decreased over here by 35,000. So that's significant and close to that volume. And then we have another one that increased by 40,700. Now keep in mind there are other trades going on, not just these two, that will also impact the open interest. However, here it kind of just paints a different picture now. And it doesn't look like, well, we're not closing out of both. We're not opening both. So it doesn't look like a, close or an open of a new position. But what it does look like is it's closing out of one and opening a position in another. So this here looks like a roll, right? Taking a position in a call in the shorter month that you might be long, and putting on a calendar spread by getting out of one and rolling it and buying the next one, or rolling an opening position in the next expiration going out, right? So taking a call position that is in the shorter term option and rolling it to a longer term, February 20th, that expires after that January 16th. So the idea here is, now that we have these spreads, right, we keep analyzing them further. Well, what's the next? We have this big spread. We're not going to know for sure, especially not the same day, because we don't get the open interest until the following day. That's based on settled trades. But once we look at the next day's open interest changes, and we compare those changes to the volume of these big spreads, then we could get more insights. Well, what do we think happened? So just looking at the first three, this one looked like a new position. established yesterday in the Feb 2076.79 put spread. This call spread over here looked like closing out of a previous position because both those options saw steep decrease in open interest. And then this calendar spread, what we saw was that this looked actually like a roll. So it was executed, as a multi-leg spread, like a calendar spread. But in actuality, if we look at what the open interest is indicating, it was rolling from one option into a different option, right? Exiting one option and then getting into a new option that's further out. So Will, I'm going to stop there and throw it back to you.
Unclear.
AD, great job as always, my friend. Thanks for bringing these webinars to the Chameleon community, buddy.
Yep. Thanks everyone for joining. Stay safe out there. And I think when you have off,
No, it's not this weekend. It's next week. I'm off Friday, and then I think Monday. I don't know. I think it may be an exchange holiday. It's Martin Luther King weekend, and then Tuesday and Wednesday we'll be back Thursday. But I'll put out videos. But that's next week.
Okay.
All right.
Sounds good. So
we do have an upcoming interactive brokers webinar that I'll put in the chat tomorrow. That is this coming Tuesday.
Yep. And that will be on open interest too. So we got
awesome.
We got a little bit of a preview. All right.
Cool,
Thanks,
D.
everyone.
See you tomorrow, my friend.
Trading day. See you tomorrow.
Bye-bye. Hey, everyone. Thanks for joining another Market Chameleon webinar. I apologize, Mike. I was typing in something about the RV. I love that RV. It's just a little bit out of the McBride price budget, but that was a nice looking RV. I had some fast market conditions I was dealing with in the background here, but everyone, thank you for joining. Remember, thumbs up, follow us on all the platforms, YouTube in particular. Remember, you can email support at Market Chameleon anytime with any questions or leave comments in the chat. Everyone have a great, safe trading day, and hopefully we'll see you tomorrow. Have a great day, everyone. Bye-bye.
Control. See tons of devices with a connection powerful enough to make your smart home brilliant. Upgrade to Fios Gigabit connection and get more out of Fios. Change the way